Bitcoin is mostly trading sideways, though it is down a little bit this morning. The dollar index is at a very important level, and the volatility index is giving us some signals that are very interesting. Now, 4 years ago, it didn't used to be that crypto was so correlated to the broader markets, but as Wall Street and major funds have entered the playing field, there are correlations, which is why we are privileged to have Paul from Definity joining us to share his insights from 30 years experience in price analysis. Welcome to the Crypto Rain channel. I'm your host, Jay Rain. If you like money in crypto and you're looking for a seasoned investor take on the crypto market, join the Rainmaker family. Do note, I'm not a financial advisor. Paul is not a financial advisor either. I'm a crypto investor. Paul invests in many markets. We do want to give a shout out to our Patreon members. We have a private Discord that our Patreon members get access to. There is a link below for those that are interested. We also have a free Telegram group that you can join below with a fantastic community. Our admins frequently purge the bots and we kick people that are toxic. So it makes for a first-rate community of intelligent people to join and get ideas from or bounce your ideas off of in this really low market, which is actually a critical time to be here. Many people don't think about it, but say you came into crypto last year, you were probably looking at the charts and seeing when prices were very low in the past, and you're like, I wish I could have joined then. Well, if you're here now, this is one of those periods. Now make it rain on that like button. That helps the channel grow. So if you would take a second and hit that like button and strap in for the show, and let's welcome Paul from Definity.
Great to be here as always. I think we were talking just offline just before we came on the show about it being full moon. So we've got some very interesting potential reactions to the market at the moment, given the cyclical analysis that goes on out there. But I think in broader terms, it's pretty clear that we're treading water and everyone's very nervous, which is understandable. A big bull market in risk is ahead. We just got to get all these pieces in the right place and for the right reasons. And I'm going to try and explain my thought process as to where we are in the big picture with a few charts and with a little roadmap as to what might happen over the coming weeks and months. So look, obviously crypto's down a lot and people are on the sidelines. Some people are questioning existentially whether they should even be in crypto. I can completely understand that. Whatever your opinion on it, I don't think it's going away. And I think once everything gets sorted out, there will be some big winners. So if we think about the dot-com boom, there was a lot out there and then it got all filtered into the stronger ones. And then those ones turned out to be very big. We are at an interesting point in broader cycles. And that interesting point is that we've seen the first wave of inflation. And that first wave of inflation has meant that the US Federal Reserve has raised interest rates to kind of rein that in, to stop that guessing out of control. So what did the asset markets do? They all collapsed. And this is what we saw in the summer. They all panicked. Interest rates are going up. Mortgage rates are going up. There's going to be a war. And all this stuff caused everyone to go on the sidelines. But the point is, this was a kind of reevaluation, a kind of new normal. It was going from virtually zero interest rates to anything above that would be a bit of a shock to the market system. So we're kind of normalizing, and that first step was always going to be a little bit painful, like maybe going back to work after a long holiday or something like that, or an extended holiday. And so we took the pain of that, and the market's seen a rally. Now, inflation in the last print on CPI, which is what the whole market is looking for. And the reason why I'm talking so much about this is because next week on the 13th of December, we're going to get the next print. And this is why the market is currently in this cycle of just holding and not sure what to do. So if that number is a higher print, they're going to worry that inflation is getting out of control again and interest rates are going to go up. And the nervousness is, from the rally that we've seen so far, they're starting to take some short-term profits. And that's why we've got the VIX index, which is a measure of fear in the S&P 500, has rallied. and some of the stock market indices, which we'll look at the moment, have come off. So this is an understandable reaction, and market might be a bit shaky over the next few days, probably into Monday of next week. But I can't say for sure, but I think that's kind of the roadmap. But this next CPI print, I don't think is going to be inflationary. I think the market is actually now starting to think that this slowdown is going to be much bigger than they thought. And that actually means that we'll get to this very strange situation, which is quite unusual, where bad news becomes good news. So the worse the news, the more likely the interest rates will go down, the more likely the risk rally will go on. And this is setting us up for perhaps a good 2023, but maybe early 23 will be a time of stabilization. But there is a big rally coming, and this is what the market is going to be looking at. I was looking at the chart of the UK FTSE 100, for example, which is very close to some massive highs. Given how, I mean, I can only talk about the UK press really, because I'm in the UK, of course, and I'm more prone to seeing what they're talking about there in terms of the analysts. And usually they're wrong when they're saying that there's going to be a property market collapse, there's going to be a stock market collapse, but they're all really, really bearish. Yet look at this chart here of the FTSE. It is extremely close to some major resistance. And if we get through that, there's not much that won't take it through into a new high. So I know that's not quite on your screen at the moment, but I promise we'll pop that on a little bit later. So here we go.
Yeah,
so here's
my bad.
No, it's okay, no problem. So we can see that. So around here was big panic. Everyone's saying we're going down, crash, etc. Look at the rally; it's been massive, and so we need a correction. And this is what we're getting. We're getting a correction in the FTSE. We're getting a correction a little bit in the Dow. Tech stocks haven't really enjoyed the rally, right? Because what happened in the pandemic, they got bought out of sight. So you know the market's a bit saturated on those, and so therefore it's understandable. S&P 500 been bullish on that. It's having a little correction. So you know these aren't this isn't a massive risk off environment. It's just that the market is kind of wondering what to do, and in amongst that, crypto has obviously gone sideways. Now, a couple of weeks ago, everyone was talking about how it's all going to collapse. And of course, the news flow was absolutely terrible, but we're still holding above lows, which is extremely important. So the psychology is important. So my feeling is, to summarize, in terms of the broader risk, sort of risk on, risk off environment, we might see it a bit shaky over the next kind of few days into next week. This point here was an important point that we mentioned last week, and I must admit I didn't change my view on risk because it's broader. That my broader view is that risk on will remain, but the VIX index had seen a really nice retracement into support, and I thought we might see a little bit of a rally. Now I don't want this to get out of control. I think it could be just a bit of profit taking by those short-term traders who've been long risk and worrying about next week's print. And I think from there, the crypto market just needed to cool off a little bit because there was just so much what I would call heat around it, with everybody talking about it, everybody saying, that's it, it's over, all the bad news needing to come out. And I don't like that. I don't like it when the market has too much attention. I want it to be rallying quietly in the background. You know, people like Crypto Rain talking about how they're thinking about buying certain tokens, and nobody's focusing on it. When we're at the top of the market and everyone's saying how brilliant it is, we're going to get the inverse of what we're seeing today, and that will come at some point in the future. But cyclically, we don't want too much attention on the market, and we've had too much recently. So that we need a certain amount of kind of quietness and consolidation before these trends can change. And that's, I think, the phase that we're in at the moment. So in broader terms, I still think risk on is where it's at, and it will continue into next year. Most people are still very nervous of the broader market, and mistrusting it, and they're going to be worried about bad news, bad earnings, the consumer, and especially the US consumer, because you've had the strongest currency, and that has been a problem. Strongest currency, you move first with rates, and you know, affected geopolitical risk, people buying the US dollar, so that you've had all this, and the data's got to bear that out because it's lagging. But the market is looking past that. That, like, the clouds were there, and they're gonna go past into next year, and the market's already looking forward to that. And any bad news, they're expecting the Fed to either hold interest rates. But I'm going to say something now that I don't think many other people are going to say. We might even start talking about a cut in interest rates, which is completely off the radar for anybody else. So if that happens, if the market gets wind of a possible cut, then risk on is going to really kick in. So it's really interesting markets. We're at a crossroads, that's for sure. And there's a lot to keep an eye on. And we still got to just keep focusing on these overall markets to see when these trends actually change for crypto, because they haven't changed properly yet. They're just consolidating. But what you don't want to be is not in the game when it's turning and missing out on the rallies. So that's why we've got to be here every week.
Yeah, it's a really good time for those longer term investors that just look to buy low so they can sell high. I mean, this is all loading zone, right? Could it go cheaper? It could, it might, but it also might not. And it's like a lot of these altcoins are discounted anywhere from 90% off to 99.5% off. And that's what bear markets look like. What else bear markets look like is total apathy. And you see that, right? You see so many people dispirited. Like I was responding to a comment just a bit ago on the last video we did about the VV collectibles. And they said, actually, VV collectibles don't sell out anymore and go under buying priced. Interest is at all-time low, to be frank. So he's taking that as a sign that, like, well, I can't say exactly what he means by that, but some people take that kind of disinterest as a sign that things are dying. To me, it's a sign that, like, that is great news. That is a fantastic time to be buying. And when interest is all-time highs and things are going so crazy, is a good time to be selling. And it's just contrary to what most people do, right? So as human beings, we tend to get dispirited during this time and fall asleep, or honestly, like, people tune out. And, you know, as a human being, we are emotional creatures, far less logical than we think. And so tuning out kind of helps us if we tune out a little bit, because if you're looking at everything every day and you have no new money to invest, it can be dispiriting, right?
Yeah.
But it is a good time for those that are able to dollar cost average in at these lows, at least with my methodology. That's how I do it. Paul trades very differently, and it helps that he has 15 different markets that he can trade across, because he waits for very specific indicators that the market's going to go a certain direction, and then takes good risk to reward profiles. So on these Thursday events, you get a chance to see two perspectives, which I like, plus Paul's amazing 30-year background in trading price levels. But my perspective is I generally just buy at these lows, and then I hold till it goes crazy, and that's when I take profits and I sell. And it's not that going crazy part, it's buying time.
Yeah, if it was easy to make money, it would feel right. It would always feel like, oh, okay, this is you know, it feels great to be buying here, so I'll buy some. So of course, psychologically, it can't be like that. Otherwise, you would just sort of walk in off the street and be naturally a good trader, and nobody is. Right? Nobody, I can tell you, is ever naturally a good trader. The people who think they're naturally a good trader have never seen a bull and a bear market. So somebody comes in and buys in a bull market, and then it goes up a lot and they make a lot of money, they won't keep it, because the market will go down or do something that they don't expect, or they'll take too much risk, or they'll make a mistake. And there's like a shopping list of trading rules, and they'll break one. So, and one of those rules will obviously be what costs them a lot of money. And that's why when you're hearing things like, yeah, it feels really bad. That's why we should be getting in. Yeah, I mean, there's a risk that an existential risk, which means, yeah, of course, crypto could go down a lot further. And yeah, okay, could Bitcoin go to zero? Probably. I mean, nobody can say, this is one of the first rules of trading. Nobody knows for sure where anything's going to absolutely go. Certainly in technical analysis, we make no assumptions about if somebody says, can it go to zero? I can't say for sure that it won't. Can it go to 1 million? I can't say for sure that it won't. So therefore, I have to have a completely open mind about where the market will go. But what we do know is that at major market lows, sentiment is extremely negative. And at major market highs, it will look like there's no stopping it forever. And so those two things are probably the most consistent things in financial markets. So what I'm looking for is something called accumulation, which is when we have this current really bearish sentiment and the market stops going down and starts going sideways. Sometimes it takes a few weeks, sometimes it takes a few months, but it builds a base and then people fall by the wayside and stop watching it. And then out of the blue, it just starts rallying and nobody trusts it. And it ends up going into a strong bull market. Now, there's a few steps that we need to get through before that bull market is confirmed. But step one is sentiment is really bearish. So, risk reward where we are, it's not a bad time to deploy a little bit of capital that you can afford to lose and sit and wait. If you're leveraged up, hoping that it's all going to turn around and you're increasing your risk as the market goes down, buying dollar cost average with risk is a very bad thing. With huge leverage risk can get you into a lot of trouble very quickly. So it's actually how you manage your risk and how you manage your timing. And timing wise, it's looking very interesting. Now, it still might take a big pull of risk on into next year when there are these interest rate falls that I'm talking about, or even holding at current levels. If they stop raising, the market will go banzai on that. They'll love that. But if they even talk about a potential pullback on it, then I really think that we'll see something spectacular, or it'll be stoking something spectacular. And in my mind, if that's going to happen, I can't see why crypto wouldn't get involved with it. I mean, it might not, but it would just be really unusual because it's the perfect asset to benefit from this type of speculation. And then coming back to fiat currency, we know that they're going to try and inflate away the problems that they've got because they've got a lot of debt to get rid of. And the only way to do it is to kind of mask inflation, let it run hot, print numbers that don't look too bad, keep interest rates low, and watch the value of money sort of disappear at sort of 7 to 10% a year. And crypto should benefit from that. So at some point, sentiment will change and hopefully we'll see the reaction and the price action. So that's what I'm looking for, but I can completely accept where we are now. It just feels awful.
Yeah, this is what the last bear market felt like too. And this is what, the background as an investor, I did real estate for 20 years. And so what's funny is the feeling feels the same when everything's way down and people are running for the hills. Oh, it's a terrible place to be. And so my background in real estate is what told me when I got started in 2017 when things were running up, which is really exciting. Great times. Everyone tends to come into crypto actually when things are running up because we all get our attention is caught by our friend making 10x or 15x or 50x gains. And we're like, wait, what? Which we jump in just in time to catch the top of something. And then we also then catch the decline into the bottom. And the difference is that the smart stick around, right? And so I guess it was less a question of intelligence, more a question of I had seen this many times before. And so I stuck around during the bear market and I loaded up. And it felt exactly like this. And my friend said I was crazy. And I just kept buying more. Every single paycheck I had, when I'd get bonuses, it all went into crypto. I was broke all the time, and my wife kind of laughed at me. Why do you have no spending money? It's like, well, I could, but I'm putting everything into crypto. So when the market turned around, it was freaking amazing and life-changing gains. And so like now's one of those times again when it's this low. And for those that are sticking around, I think your future self is going to be very happy with the decisions that you're making.
I also think, risk reward, having some rather than none is worth it. And if you look at a small amount of your portfolio to sprinkle in at these levels is worth it, just because we could be at a very significant low. And I think one of these coins is going to do, or obviously a few more than that are going to do extremely well at some point, even if it's like this is one last hurrah for it, like one big rally before everything turns down again and some other new technology takes over or central banks kill it, which I don't think is possible because there'll always be countries that will be outside of that. But those kind of discussions aside, the key to all of this for me is risk. And even if other markets are moving up, if equities are moving up and people's house prices are moving up and they're making money in other areas, they are going to sprinkle some into other things. They're going to take risk in cryptocurrencies just because it's there. Now, that's the kind of worst case scenario for me. The best case scenario is the use cases become stronger and stronger as the technology improves and the use cases and all these entrepreneurs that are creating these projects that we at the moment aren't using but could be using in the future. They become the Amazons of the future. Just a few of those and suddenly it all changes. So we all know that the actual blockchain is something amazing technology and smart contracts are going to be useful. It's just a question of how this all gets applied. And as I say, I think the lowest risk is that it's a spillover from a frothy market elsewhere. But the best case is that it's these actual products that are what people want. And I don't think anything's changed for the big holders of, say, Bitcoin. I don't think they've changed their mind about where it's going or the reasons why they were holding it in the first place. If you were trading the markets around 2007, 2008, which I was around, from way before then, as you can probably tell, but I can tell you that period was scary. It wasn't just bad. It was frightening. It was like, we thought banks were going to close. You didn't know where you could put your money because you would lose it all if it was in the bank, potentially, because the bank could just go bankrupt. That means your pension. That means the cash machines aren't going to work. That means governments are insolvent. That means, if the government's insolvent, then what the hell happens? The currency's worth nothing. It's like it was frightening beyond anything that you can really explain. But we got very close to a complete collapse of the financial system. So this was why this was created. It was created for a very stressful situation to be an alternative to fiat currency. And I don't think that's how can that have changed? That hasn't really changed. So if it does get cheaper, sure. And if it's because some people have been improperly applying capital, to put it mildly, that's something that will pass, because there are equally some very smart and intelligent people out there who just want to do the right thing with this technology, and they will win out against charlatans, quite frankly. But that was why it was created, and so I still feel that there is more potential. Now, again, for me, technically, week on week, we could still see either further consolidations in the majors, or maybe some more downside. But I don't know. I still like the fact that sentiment is really bearish, as you do.
Mm-hmm.
And I mean, I think this is how it should feel near a low. It's how it should feel near a major low. So we just need to wait it out. quite frankly. Just hold on. I think where things are going to be really interesting for us is when things turn around and that trend starts to move fast to the upside. I'm waiting for that point where people are waiting. You know how they wait for the pullback and they say, oh, yeah, okay, I'll buy some, but it just needs to come back a little bit.
Yeah.
And they're chasing it and they're having to chase it. But knowing how to operate in that environment is it makes all of this kind of waiting around worthwhile, because this waiting around is very difficult to deal with for anybody. Because what can you do as a trader when the market's not moving up, unless you're going to use option strategies to capture the fact that the market's in a range? There's not a lot you can do other than sit on your hands. And I know that's what people are doing. They're sitting on their hands going, look, nothing's going on. I can't add to my position. I haven't got the capital, maybe, or they don't want to, or they're too scared, or whatever it might be. Completely understandable. But when the trends start moving fast, that's when it becomes really interesting. That's when week on week we start to see massive gains. And that's, again, where technicals really helps, because it shows you where to get in with a lot more sort of, when you right or wrong very quickly, and you get big gains, good risk reward, all sorts of things that good trades are involved with. And also it helps with long-term players as well. So everything starts to align. You get the long-term players are rewarded for holding, and the short-term players are rewarded for, going with the trend. And I'm very much a trend trader. So I'm looking for those trends to start to form. So yeah, I think it's going to be really interesting, and it's going to be a lot of fun. It's just that it doesn't feel like it right now. So
you bring up some good points about like how this technology, the fundamentals behind it haven't changed. Like, what does this whole idea of decentralization do? Well, it takes out a lot of the middlemen, and so that creates more efficiency. It also makes things more permissionless, right? So imagine you have to send 50,000 across countries and across continents. It's very expensive to send 50,000 across continents, or say 5 million or 10 million. And now with crypto, you can do it very fast, and you can, set up an account somewhere else, and you can deposit. You can pull out from, say, your Coinbase account or some other account into that other account. So you can actually transfer money quickly. And so things become more permissionless. They become more effective. Crypto will absolutely change gaming, because it introduced the idea of actually owning your items, owning your account, owning the things that you collect, and being able to capture the value as that game gets profitable. And so the fundamentals are still really, really strong. What happened is we always overboom and then we overbust, and we're in that overbust period. And when I like this analogy because it really helps me picture what the true bottom feels like. Say you get in a fight and the bully like knocks you down to the ground, and then you get up. It's like, well, that's not what the bottom of the bear market really feels like. What the bottom of the bear market is, you go to get up, and then the bully knees you in the face, and then he kicks you about 15 times while you're down. And that's what usually the bottom of the market feels like. And we're really getting to that point, which is exciting. Is this the end of it? Sometimes you can't tell whether he's going to kick you 10 times or 15 times or 20 times while you're down. But that's a good indicator. When you're totally getting kicked while you're down, that's a good sign that we're very near the bottom. And it probably feels to you, most of you, like that, because I know a lot of the audience came in sometime between January last year and October last year. And so the market is hugely down from there, and you're probably feeling exactly like that bully's kicking you. And just know that's not a bad thing. That's part of the way the cycles go. And one of the things that attracts me to crypto is the volatility. And the downside of that volatility kind of sucks when you're there and you bought higher, and it's hard to tell exactly how the market will play out. Once again, the market played out differently than all three of the scenarios that I had for it. That's just part of it, which is why I don't trade on leverage. I buy the actual positions. I try to take positions in good companies, good projects that'll do well long term, so that if things do pull back, that's all right. I hold it, and then they'll eventually go up. And not only will they go up, the volatility makes it so they go up a whole lot. I wondered, Paul, if we could take a look at some of the majors and go through the majors. These are some of the blue chips, some of the second generation cryptocurrencies like Cardano. We'll take a look at ETH and Bitcoin. Let me share your chart.
Yeah, sure. Let's start off with Bitcoin because we should. I'll make one final comment, by the way, just about broadly speaking, the use case and the potential for using these cryptocurrencies. There was a situation in Cyprus where the government basically decided to impose capital controls, which means that you couldn't move money in or out without permission from the government, and they took a percentage of the value of the deposits in the banks because of a situation where there was apparently Russian money. This was, what year was it? Was it 13 or 17? I can't remember, but it was at a point where it sounded like the euro was going to break up over it. But the point of it was there was no other way of moving money around. And this is what helped cryptocurrencies develop, because there's no way of stopping that. So if you move your money into Bitcoin, you don't have any capital controls. The government can't stop you moving your money. And so price of gold went down in Cyprus because, of course, everybody wanted cash because they had no cash and they couldn't move money in or out. So I thought that was a very interesting point, that people say in a crisis you need gold, but yes, you do in a normal functioning market. But if you're not allowed to even trade in gold, then what do you do? And so there are times when the only answer is cryptocurrency. But looking at the chart here of Bitcoin, if we move to a weekly chart, which I think is more appropriate for what's been going on, well, for a start, look at the major upward trend. I mean, this is still part of an upward trend, believe it or not. Yes, I know it doesn't feel like it, but it depends where you've started. For people who've been watching it for a long time, this is fairly normal in terms of retracements. They've seen it happen quite a few times. And we're coming into major support from what was prior resistance. So at the end of 2017, going into 2018, there was everybody talking about this being the next thing, and it's going to take off and it's going to be fantastic. And there was this lot of end of the trend type speculation. And then we got this collapse, and it was like, okay, this is the end of crypto. It's at 3,000. Everyone's got it wrong. It's going to zero. Well, from there, it went up to 69,000, didn't it? So it's what we've just seen. So we've had this kind of, oh, this is it before, and this sentiment change before. And my job is just to follow these swings and to look for the discrepancy between what the sentiment's saying, what the chart's saying. So we are approaching some major support levels. This 78.6% is kind of like a final support point for Bitcoin from a major perspective. So I wouldn't want to see it much below 14,786. But if you'd gone back to 2017 and said, it's trading at 14,786 and we think it's going to go to zero, people have said, what are you talking about? I mean, that's still hugely elevated from where it was a few years before. So it's all the correction is all relative to the prior trend, and we are close to major support here. But this major trend line demarcates an important point in terms of if we're going to get back to the levels that we saw in the summer, it's got to get past some hurdles, and some of those hurdles remain. So this 17,600 point, which was a major spike down, which could have been, was part of a low, was part of a decent low, but not the low, which then got broken again. We need to recover that. And then that's step one. And step two is get through this major downward trend line. But if there is another leg down, and I don't know whether there will be or not, but if there is, this area here is extremely interesting. 14,715, which is Fibonacci, and the peak of this resistance point here, which is around 13,886. I think that's kind of like a shut your eyes and buy it, no matter what the news is. And what we'll go, that's just like one of those, you put your buy in and you put your stop in and you just don't look at it, because that support is so important. And so it should be like one of those rebounds, like a trampoline. You hit it and it bounces up a bit like this one, except hopefully if it does get down there, that would be the sort of move that gets sustained. Now I'm hoping that we've flushed out all the bearish sentiment and it's going to start squeezing up from here. But that's kind of not clear at the moment. It's still just going sideways. Now, ETH, again, we said it last week and we keep saying it, but it continues to be true. Still hasn't taken out its 2022 low. And that is really intriguing to me, because it means that either we are close to a major low, or might have one more go to the downside and then back up again. But I kind of like it here because it's held off its recent low as well, and it's kind of moving up. So it wouldn't surprise me to see this squeezing up a bit more, even if it's part of a consolidation, even if we've got to sit on our hands for a bit longer before this new trend starts. ETH is definitely not playing ball with the bears. It's not that they're not in control of it for sure. So if there's going to be a rally, we're going to see it spark out of this one, and everything will hopefully lead from there. Now, the altcoins, yeah, they're a mixed bag. Some are under pressure still, and Cardano is one of them. That's still in this downward trend. There was this symmetrical triangle pattern that we looked at, broke the low, came back for a retest, and used that as resistance, and it's still, unfortunately, going down. It needs to break this downward trend line, this major downward trend line, or get through the 200-day moving average. The major downward trend line is closer, so it will do that before it breaks the 200-day moving average. But the trend is still negative there, unfortunately. So we can't call a major low as yet. I need some form of reversal pattern or some indication that it's hit support and rallied really aggressively. That tells me that the market spiked, it's flushed out the bears, and it's time to move higher. Now, if this isn't the low and it's going to continue to move down, the next major support is around 17 to 18 cents, that sort of area. But if we're right about ETH turning around, hopefully this will show a bid at some point and give us a good technical signal, but it's not there yet. So we're going to have to wait. Solana, obviously, has been in the news a lot.
I want to make a point about Cardano real quick.
Sorry,
in the price. What's interesting is during the last bear market, right, it really traded a lot between 7 to 3 cents. We did have one wick that took it down to 1.7 cents, and then it popped back up to 2.5 cents pretty quick. And so looking at that, the bottom of the market for Cardano last time was 1.7 cents. So if it does wick down to that area, that actually would be 10x from where the previous bottom was as well. And it's right where that support is, around 17 cents. And so very interesting number there. Yeah, 17, almost 18 cents. So maybe it does wick down there, right? Because it's not even rounding the bottom yet, so it looks like it's going to decline some more.
Yeah, this whole move here still is, from March 20 up to August 21, is still what we would call an impulsive move. So it still looks like this is corrective. So despite the fact that it has actually been soft, what I would describe as soft, for quite some time, because other things have rallied. Some other markets are relatively around where I'm putting the cursor here, as opposed to down here. But it's still in a correction. So when you look at a chart from a long-term perspective, and it's always good to zoom out and say, well, look, where is the general direction of travel? The general long-term direction has been upwards, and this is a correction in this upward trend. So at some point, we would expect to see support coming in and for it to turn around. It's just we need to get that confirmed. But people say, oh, that's if 17 cents is where the support is, it has to go there. That's not what I'm saying. I'm saying if it continues to go down, that's kind of the first place that I can see here naturally where I'd say, right, I'd want to put a bid there because it's acted as good support or resistance, so it should be then good support. But I would prefer it to show strength and for it to break this resistance line or this downward trend line. If it does that, to me, even though you're paying more for it, which might sound slightly illogical, at least it's moving in the right direction if it's doing that. So that's why I like to have these tripwires, as I call them, that gets me bullish. Because you can also fall into the trap of when it's up there, you go, oh, okay, well, it's up there, but I don't trust it. What if it comes down again, and start second guessing the trade? Before you know it, it's like on its merry way. Yeah, exactly. So you have to
funny
have
when
something.
It breaks those lines and reverses. Sometimes it's very quick. I mean, if we look back, let's look at the last downturn. Let's look at the last bear market and how depressed. Yeah, right there in 2020, right?
Yeah.
And
oh yeah, yeah.
That was the wick down, right? And this is why I don't trade on leverage, specifically Cardano. I had 10,000 set aside in case it broke under 2 cents. And the problem is I had a very low leverage long on Bitcoin because I knew we were near the bottom, or I strongly suspected we were. And so I put it in, and Bitcoin was about 7,000, which was really, really low. And I was like, as long as it didn't break below like 5,200, I wouldn't get liquidated. Well, it wicked all the way down to 3,800 and liquidated 1.6 Bitcoin. And so I had to use that 10,000 just to rebuy my position. Wasn't able to deploy it into Cardano, which at under 2 cents, I would have been able to buy 500,000 Cardano, which was $1.5 million mistake, essentially. Wow. $10,000 would have turned into $1.5 million, actually more than $1.5 million when Cardano hit like $3.40 at its peak. And so, I learned painfully that even though you're right, sometimes with leverage, you can be wrong ever so shortly, and it'll ruin you, right? And because I took such a low leverage long, I didn't put in a stop loss because I thought I'd be protected by how low the leverage was. And that was not the case. And so now I just trade spot, so that when things get really, really juicy like it did, I can just buy. And if it goes down more, that's okay, because I know generally I'm going to be right. Even if I'm wrong in the very short term, I'll be right in the long term.
Yeah. So one of the other majors, I think, we're about to go to Solana, weren't we? I believe.
Yeah. Because it has gotten savage because of the fallout with FTX, and they were such big holders. And maybe it gets even more savage because it seems like FTX in their bankruptcy will have to sell off some of their Solana positions, and some of those have some unlocking schedules before they can get access to them. So I don't know what their unlocking schedules are like, but so do note that Solana could get a lot cheaper. So for me, it would either be a sell or a wait, but definitely not a buy on Solana. It's just one to watch. Now, it could be the case that Solana doesn't survive this. It probably will, but it might not. So realize it's a risky bet, but I don't feel like it's yet priced as an extremely risky bet. And that's when I would start to be interested to buy.
Yeah, it's again, it's one of those things where it is still within this downward trend, and as I was saying at the top of the show, there's too much heat around it for me to be comfortable. It feels a bit more like flipping a coin at this point. There's no technical patterns other than the spike down and the strong recovery. That strong recovery, this candle here, let me just zoom in. Here we go. So you can see we got the spike down, which would normally be followed by more downward candles, but it's reversed. So the market knows that there's bad news out there. The market knows that they're selling. it's kind of braced for that. So beyond that, we're asking the question, what don't we know about this that could come out? And so I don't want to be a hero at this point and try and pick the low, because it's like I'd much rather be paying for it as it's trending up, in a really smooth trend and nobody's talking about it. But I would say that this recovery, this rally here, is interesting. It's unusual. So it means somebody stepped in and said, actually, I'm having all of that. Despite all the bad news, I want some of that and I'm going to pay up for it. And it's taken it all the way back up to the virtually where this big sell-off occurred. Now, this stuff here is just like noise, but it's holding within the top end of that bar, which is good, which is a good sign. It's not enough for me to jump in, but it's like, oh, okay, that's kind of impressive that it's holding up near that near the top of the bar, especially, as I keep saying, given the bearish sentiment. So what is a given is that it should be lower. So the market's like, yeah, don't want it. It's got all sorts of problems, should be much lower. So I've locked that in my head and I'm thinking week to week, if it doesn't go down, I want to know why. And if it makes a technical pattern, then we'll be all over it. Because that to me would be a very good risk reward trade, a good solid technical reversal pattern with bearish sentiment, and nobody likes it, but technically looks good. That's a really good setup for me. So something like a double bottom or what have you. But we can't see that yet. So all we got is, a sharp decline and a good rally, and it's not behaving in the way that the bears would actually like at the moment. So that's interesting. That puts it on the radar, but it's not quite enough to pull the trigger. So for me, it's a wait. But
Yeah,
I like the bearish sentiment around it, and from a contrary opinion point of view, I don't want it to be bearish. I'm just analyzing it from a sentiment point of view. I find it interesting.
Well, let's take a look at another blue chip, Matic. And there's a lot of expectations around this. And actually, Matic and Cardano both benefit from Solana having some severe problems because, well, projects that are building on Solana, or we're going to build on Solana, if they're going to move somewhere, they're most likely to go to either Cardano or Matic, or which is now called Polygon, or it could even be Immutable X. But Polygon and Cardano are the two biggest beneficiaries. So let's take a look at its price.
Yeah, so you can see the difference between this and Solana is obviously quite massive. If we just flick back between the two, we can see, relatively speaking, Matic, and we've said it many times on the show, that it's one of our preferred markets from a technical point of view, and it's been borne out by it holding up. So when it was holding up around here and doing some strange things when everything else was going down, or at least holding sideways, it was like, well, why is it doing that? And now you see the market knows that there are these problems. Somebody knows. It's just it takes a while for it to come out, and this is this purging of information. And then so this explains why it's been relatively performing so much better. Now, for me, this is either a buy because it's performing better, to a wait because it's consolidating. So compared to everything else, if I held it, I'd be quite happy to hold it. If I didn't have any, I wouldn't mind just buying some, but it's like a train that's getting ready to go and it's not really moving that much. It's not got loads of problems with it. It's not like it requires a huge amount of maintenance, and that a lot needs to change before it's going to get going. Now, that doesn't guarantee that it's going to go up, but it's technically performing much better, and in a way that I would be much happier with. So if we look at where the nadir for it, the big low, that was in June, and it's been rallying since then. So we can actually tentatively draw an upward trend line, which is that is what we need to start the reversal. It's actually above its 200-day moving average, which is here, which again is a good sign. And it's not many around that have above their 200-day moving averages, I can tell you. the 60-day or the 3-month moving average is 2-month moving average is more sideways. So this is like my medium term moving average, medium term and long term. So I use these two, and it's showing that pretty much what we know, that the market is just going sideways for now. But this 200 days is saying, from a long term perspective, it has actually managed to recover a lot of this bear move. So that's why I put it in the camp of, I actually prefer Matic in the same way that I prefer ETH to Bitcoin, because technically it's performing better.
It's showing some remarkable strength given the general sentiment in the crypto market, which is everybody's asleep, right? And money isn't coming in. And so it puts people to sleep too, because there's no action or activity. And it's amazing how few buy. And what's funny is people are buying Matic because it has some activity. I prefer to take ones that I really like the long term of, that are completely asleep, that everyone's sleeping on. But Matic is showing some really good health, and it's not a bad thing. Matic probably has a bright future and is probably going to be around for forever. It's probably hit that point that I would be surprised if it's not here in 20 years.
Would you say that if you had a choice between Cardano and Matic, which one would you go for?
Cardano.
Okay.
I like both, but Cardano just continues to do things right. And they took this slow approach to building its very, very unique ecosystem that has it's got one of the strongest communities behind it in all of the crypto space. And that's why that in performance, because the truth is they often get delayed, but their delivery has had very few problems. So they took a slow, methodical approach to building, and that's paying off. Unlike some of their competitors that said, let's build fast and it's okay if things break, we'll just repair it or we'll fix it and stuff. So Cardano seemed to take a long time, but it's getting to the point that it has its building blocks in place and its foundation really strong, that it can then go really high, really fast, and have a lot built on it and be very scalable and stuff. So I'm a big fan of Charles Hoskinson. I like what Matic has done. They've proven themselves. I remember when Matic was extremely cheap and they were making a lot of promises, and they've delivered pretty well too. That's one of the things I really like about Matic, and they've attracted a lot of projects to building on their chain, and they're continuing to improve it as well. Between those two, though, Cardano is my preference by far. Just the community is so strong and so dialed into Cardano.
Interesting. Yeah. So was that one more? Was it OMI that you?
Yeah, let's take a look at OMI again. It's doing something really weird on its price, and we talked about this last time, and I talk about this one. This is one of my biggest holdings, and I invested in the pre-sell on this in 2018. During the last bear market, it went down. It got savaged. And then from there, it went like 1,000 or 2,000x to 1.4 cents. And so it's come off those highs, and it's down 95% from those highs. And so especially at the 0.071 price, 0.071 cents price, that's literally down 95% from its highs. So it's come up from that, but some interesting patterns. I wanted to get your thoughts on it.
Yeah, so we were looking at this rally, I think, a few weeks ago, because it was so out of character with what A, happened before, and B, the broader market being extremely bearish. So we had this rally and then a pullback and then a break again. And it was at that point that we completed what's called a double bottom or base. And it's a small base. It's not a massive one. So the bigger the time frame of the base, the bigger the potential rally. So small base, small rally. Well, it could be a big rally. It just depends. But usually, so for example, in ETH, because the base is taking a long time to form, if we then get a bull trigger from that base, we can target some major upside because it's taken so long to form that base. With this, yes, it of course could go up very quickly in a long way, because anything can do anything. But the base that it's actually formed, that we're kind of pinning our bullish strategy to, is actually relatively small. But it's still bullish, and it's strange that we've got this bullish trigger in what is a bearish market, a very sort of sentiment negative market. So this trigger point at 0.00095 here was where we were saying, well, this completes a base. Now, when the market completes a base, it can go sideways for a bit, but we then do need to see it squeeze upwards fairly quickly to confirm that this is a proper base. Otherwise, the risk starts to move to the downside again. And if we look at the moving averages, they're still going down. The big trend is still a bit negative. So we have to be wary against people who buy short-term or longer-term holders, see a rally and they go, oh, I've just got to get out. I just really want to get out of this. And they just exit their positions. So we have to see how much strength there is in the market against that opinion. And if we look at where the previous resistance is, that comes from the previous buy point, like major buy point. So this low was obviously a buy point. So people have bought it, held it, and then it's broken it. They get the first test of that again. They go, right, I'm back at zero. I'm bailing out. And that's why this is a major barrier right here. So if it can get through this 0.001 level, then that'd be a really good sign. And it looks like it wants to do it because we've got a series of, if we look at the lows, they're rising. So all the lows are rising. I know it's come off today, but all the lows are rising. And this is a good support point as well. So we've got a build up of what I would say is resistance around here. Is it keeps knocking on that level, trying to get through. So if it gets through that, then we could have another kind of sharp move to the upside, which is what I would like to see. So I think it's looking interesting. And I know you've got to be a bit more careful with these more thinly traded and more off the beaten track altcoins. But I kind of like the fact that it was already going up. It's pressing some resistance levels, and risk reward, I think it's still, showing some life. So it's worth a punt.
Yeah, one of the things I like about this is it has an actual company that's providing digital collectibles with some of the largest intellectual property brands in the world, like Disney, Marvel, DC Comics with Batman stuff. And they're profitable, right? Even in this down market, they're selling their collectibles and they're making money. And lots is happening on their marketplace that's trading. There is a little bit of a burn mechanism that as things get traded in the marketplace, they burn some of their OMI token supply. The use case for OMI is about to come to fruition. When I say about, it probably will be like 4 months. But like all those things are positive for the future of this. And that's why I put so much attention on this one, is because it's rare in the crypto space to have a company that's making money right now. All of it's kind of like all of the space is like, yeah, it'll make money when this happens. And so it helps it survive the bear market. So the risk of it going under is much, much lower than your average company. Number two, the token use case is about to come to fruition that you have to stake the token in order to get some extra benefits on getting collectibles. And so I think many of the people that are just collecting collectibles will start buying the token in order to stake it to get access to those special benefits. So there's a lot of factors I like behind it. I do like the founders of this company and some other things. So very bullish on this one. The long term, and it's gotten to extremely attractive prices. I wasn't able to buy the very bottom of that. It's so hard to time it, but I did get some so in order to cut out some of the zeros, I think of it in the number of cents, not the number of dollars. So I was able to get some at 0.08 cents, which is 0.0008. And that was exciting. So I didn't get the full bottom around 0.0007 cents, but I'm very happy with that buy.
Yeah, I mean, it's when you talk about all those big names and the contract that they've got, it does sound attractive. It sounds interesting that they've got potentially a monopoly, and if they are making money, then that's quite incredible. So where would you advise, or not advise, but if you were to buy some, or you're buying some, how do you do it? Where do you buy your coins from?
So let me share the process I go through. This one specifically, one of the things that I think holds it back is it's not widely tradable. And so for some reason, my screen is not showing anymore. So let me share that again. And here's how I look it up. So just I go to CoinGecko or CoinMarketCap, and here we go. So here we are on CoinMarketCap, and I go to markets, and this tells me where it's tradable. So you can trade it on Uniswap. That's not where I trade it. Where I trade it is Bitforex. I do have a link below to the Bitforex exchange. You don't have to use my link. If you use it, we get a small percentage of what you trade. But I buy it on Bitforex, and then I send it off. So I do end up sending it to, an ETH wallet right now. So you can just buy it directly on Uniswap as well. There's lower fees on this, but there are some fees with pulling this off the exchange. One of the reasons I like buying on Bitforex is the low fees, but also I can hold a small amount of what I hold on there, because some of it I do flip, that I buy low, and when it hits a point, I go ahead and take some profit. So I keep a small amount of my overall position on the exchange that I can quickly sell if I want to trade it. So that's usually how I find out what exchanges it's on. If you look at it's on OKX, Gate.io, BitMax, and Bitforex. Okay, it is on Uniswap, which is a bigger decentralized exchange, but not a lot of exchanges out there, and they haven't focused on getting on a lot of the exchanges that people use, like Kucoin and Binance and Coinbase. But there's reasons to believe when they get some more milestones done that they could then get listed on those exchanges, which will bring a lot more volume into it. So I like to buy things before the potential is realized, because once the potential is realized, the gains have already happened. And I go back to this story of when I was doing real estate investment, and I was talking to this guy, and he was looking at this corner where there was being a Panda Express and a Walmart built. And he's like, my family had the option to buy these 30 acres 30 years ago, and it was like $20,000 or something. And I was like, well, why didn't you? And he was like, well, because nothing was here. And I was like, yeah, nothing would have been here way back then. And he's like, shoot, I wish we had done it. And I was like, well, at the time, the real estate market was savaged. Everyone was saying it was a terrible time to buy. And I was like, why don't we go a few miles down the road where there's nothing being built there yet, but you can pretty much look and figure out it's going to be a major corner, and you'll pay a little bit of a premium because of that. But we could buy probably only about 5 acres for about $30,000 these days. But in a few years, you'll probably get an offer from a major store or something. It might be 10, it might be 20, or it might be 25 years. But it'll probably go into the value of millions of dollars. And he's like, well, there's nothing there yet. And then I realized in his mind, he wanted to be able to buy at the prices of when nothing was there, but be able to wait to buy it at those prices when it's clear that a Walmart's going to go there. And I was like, that doesn't happen. You have to buy before the potential is realized, right? Because that's when the price is low. As that potential gets closer to being realized or is realized, the price gains have already been made and you missed it, right? And so did he miss it? He absolutely missed it. What was he going to do? Because that land was now going for $1 million an acre, right? They would have made like $30 million off a $20,000 purchase. But he missed it because there was nothing there, because he couldn't see past where the present was to see what might happen in the future. And it was pretty clear that was always going to be a big intersection. Those were two main roads. And back then, that one of them was actually, both of them were dirt roads, but they were the main roads. It was always going to be a major intersection. It just seemed like nothing was happening. Nothing's going to be there. And I call it the golden vision, the ability to kind of look at the way things are adding up and make reasonable conclusions about what will probably happen in the future. And I find some people just don't have the ability to do that. They can only see what's right in front of them. They can't add up 2 + 2 plus another 2 to say, you know what, that's going to equal 6. So that's why a lot of people miss it. That's why only a small fraction of people make massive wealth in like in like a new emerging technology, which would have been the internet 20 years ago. And before that, it would have been tech stocks like Microsoft and IBM and stuff 20 years prior to that. And so most people miss these massive shifts. And we can't change that most people are going to miss it. What you can change is whether you're part of the ones that don't miss it.
Absolutely. And the opportunities that are coming up. We want to be part of them. Yeah.
Yes, it's going to be hot. Well, thank you, Paul, so much for joining us. We appreciate all your insights.
My pleasure. Anytime.
All right. We'll see you next week.
See you next week. Thank you.
Yes, the market is slow. If you haven't already, hit that like button for us. I do know that it's slow. Just know that good decisions made during these pullbacks lead to life-changing ones when the market does turn around, and it will turn around. This rap I specifically had produced. I wrote the words to it. I had somebody who could sing, perform it, so it's much more interesting than if I were singing it. Although maybe if I sang it would be interesting, it just wouldn't be as good. Anyway, Charlie did a great job on this rap. He's the one that did the words, and yes, he's from the UK. You can hear a little bit of that accent. Hope you enjoy it. We'll see you next time. This Friday, I will be out of town visiting a friend. He's actually a member of the community that we've been friends for a long time. And so the missus and I will be enjoying a little R&R. And so there won't be a live stream, though we will still do our pre-stream for the Patreon members. Thanks so much. We'll see you next time.
Into the space, chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, shit right before you could was told to buy when it was pouring like a rainmaker should. I buy when it's down, don't chase the boats that I miss. Cause I always make the time in mind. I take the one out cause I'm patient like that, and I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't leave with my heart. Principles are simple, they're leaving a mark. Why when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling, got parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Time is never better, the time like the present. This next 5 years is a gift and it's feeling like heaven. I'm committed to learn, to study and to know that nothing comes easy but with knowledge the game show. Thinking out this wrong cause soon will come a bear market. Learning and growing and when it's slow will be the target. They say it's come out, Bitcoin is dead. The massive decreases can get to your head. Sticking around, the time is better. Strong like that, I'll let the others be fretters. 2 years time the ball will bring back the gains. That makes it worth the effort cause here comes the rain. So let's go rainmakers, let's make it all happen. Let go of the hate, let the haters be crapping. I'm here for 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Haters be hating, the time to slow down. Addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough. And that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck.